Joining me to wrap up the day's markets action is Craig Pheiffer from Sasfin Wealth. Thank you so much for your time, Craig. Now, we have seen the market slipping today, the JSE just slightly, and we are seeing a sea of red in the US markets, some red also in the European markets. And I'm kind of wondering if this is kind of a bearish tone or just markets kind of waiting for something at this point.
I wouldn't think it's a bearish tone just yet. We've had a fantastic November so far in the markets, local and offshore. I think the JSE is up 8%, the offshore's up 6%, may even be the other way around. Yeah. But, you know, they are high single digits after a terrible August, September and October.
Yeah.
Those were all down months. The market kind of cocking a hoop at the central bank governors, thinking that rates have peaked, they're coming down next year, and we're even starting to talk 100 basis points in the Fed rate next year. And until something changes.
Yeah.
But I think we've had a great run so far, so maybe just a little bit of a breather. Yeah. Also in a week where, as you mentioned, we've got the Fed minutes tonight. Not that that's going to be any different to previously, I don't think.
Yeah.
And even the next, Fed meeting is going to bring you the same message.
Yeah.
That the risks are there for inflation, so just be cautious.
Of course, the hawkish tone that we are expecting, but that doesn't stop the markets from looking ahead.
Yes, and the governors of central banks are going to be hawkish until they cut rates.
Yes.
They're not going to. I can't see them sort of softening up really too much before then. And of course, Thanksgiving on Thursday, so sort of a shortened week. Do you want to start getting involved in trades when you've got FOMC minutes, you've got Thanksgiving? We'll leave it till next week.
And Black Friday.
And Black Friday, we've got to be out shopping.
Getting your shopping list ready. Well, talking about shopping, investors have been shopping on the JSE, and they actually went for Telkom today. That share price at some point surged 9%. And of course, they released their results today, and a cautionary. Saying that they are in exclusive negotiations with a buyer for its masts and towers business, Swiftnet. Of course, when a company comes out with interim results, or just results in general, and the cautionary, markets usually tend to hold on to the cautionary and kind of shrug off results. And I'm wondering if maybe this is what happened, even though the results didn't look too disappointing today.
Yeah, the results weren't really disappointing.
Yeah.
I think the market just liked the fact we're getting a little more certainty of the direction of travel with Telkom and its metamorphosis into an infrastructure business, and selling off the Swiftnet business, getting in a little bit of funds as well, will help them on that journey as they change and adjust over time. So I think it was that was the positive bit of news the market took today.
And then what actually did you take out from those numbers? Yeah,
I think it's a company, they operate in the local environment. Yes. So, firstly, you've got to face the domestic issues of a slowing economy, along with all the load shedding issues. But they have been getting out there, broadening their network, connecting more subscribers. Looking at the balance sheet, that also looks okay.
Yeah.
Their debt levels are less than 2 times on net debt to EBITDA, which is what we look at, which is comfortable. So I think it's a company in transition, but the results looked like they were heading in the right direction. And their bigger strategic plan, and we've argued for many years that they haven't had any kind of strategy, just been bumbling along. And now it looks like things are starting to happen.
All right. Well, let's talk about Coronation. The asset manager came out with annual results today. Revenue falling 2%, headline earnings dropping 50%. Even the preferred measure of earnings, which is fund management earnings per share, declined by over 50%. They did declare a final dividend, though. How did you digest those numbers?
I think it's also a company, again, a lot facing local investors and their savings, and that savings pile, by all accounts, has been dwindling over many years, and they've seen outflows from their assets. So for an asset management business, it's all about growing assets and then charging a fee for managing those assets. And if you've got a dwindling asset base, or maybe dwindling, but slowly declining, or it's not growing constantly, it's hard to keep up with those growing those top line numbers all the time. And especially also where, you know, a lot of the funds are local and the markets haven't really done very much. They do collect performance fees, but those were also off quite a bit. I think with, you know, slower markets and just they've been all over the place.
All right. Well, before we get to your stock pick quickly, let's get to Southern Sun. They released their interim results today, saying that a substantial portion of its hotels are above pre-COVID-19 levels. Occupancy up to 56.3%, but still below pre-pandemic. But that operating profit declining 3%. Of course, they didn't declare a dividend, but saying that they might declare a full year dividend. So we did see that share price slipping almost 3%. Did the markets want more?
Maybe they wanted the dividend today, but the company has been, spending some money on share buybacks. They have sort of sorted out their debt as well, so they're more. I was going to say geared, but that's the wrong word. They're better positioned with their cash flows to pay a dividend at the end of the year. And they also said, 2/3 of their revenue comes in the second half of the year. So let's just wait and see how it plays out. We've given you a little bit of something in the form of share buybacks. Let's just be patient. But I think in terms of their business as well, again, they've had some wins and, other areas have been slow. The Sandton area's kind of been slow on the hotel side. They've had isolated wins like the Netball World Cup in Cape Town attracting visitors and the BRICS Summit here. But as you mentioned, their occupancies and their revenues per room has picked up. Not everything is back to pre-pandemic levels, but heading in the right direction. On the expenses side, there were a few, funnies on acquisition costs and the like, which kind of distorted the expenses side a little. But I think overall, it's just a tough market, tough local economy. But
there is some sun there.
There is some sun.
Well, let's get to your stock pick quickly, Craig. What will it be today?
Thermo Fisher Scientific. It's a life sciences company. It makes everything it makes all the tools and bells and whistles to make science happen, and for all those smart pharmacy people to develop vaccines and all of the smart things that they do. So anything from just test tubes to electronic pipettes to mass spectrometers to all of those fancy gizmos and gadgets. Gene sequencing machines and all of those things that actually help science to happen.
Well, I learned something new today. Thank you very much for your time and for your insights there, Craig, and for that interesting stock pick. That was Craig Pheiffer from Sasfin Wealth.